Hello and welcome to Business Incorporated live on Channels Television. Here's what's coming up in the next 55 minutes. The Kenyan shilling loses against the US dollar, trading at 131 shillings to $1. The Central Bank of Egypt issues treasury bonds with fixed coupon worth £4 billion. And after a monster run, gold prices retreat to start the week. Great to have you join us. I'm Ladi Williams, and your trading week begins today. Let's start with oil prices. We see it fell and open. Asia open today, fell about 54 cents earlier, but we're seeing almost a 1% drop there for Brent, $86.62 a barrel, down 0.77%. And we see the WTI crude, that one normally sits at about $85, but has to always drag lower than Brent's, sitting at $82.51 a barrel. That's for WTI crude. We'll drill down on what to expect for oil markets this week. Let's get a check on metals now. We'll see gold prices dip today. Spot gold, that fell about 1.69%, a big drop after that big rally we've seen with gold. It's trading at $2,372, and we see silver also down a big 3.39%. Palladium is also down there, $1,020.50. Well, joining us now to get perspective of what's to come, Eleman Damble, financial market analyst. Great to have you, Eleman.
Oh, hey, Lottie. Thank you for having me as always.
Right. So what's driving sentiment to the metals market today?
Yeah, I think in general, what we're seeing currently happening in gold, in particular, of course, gold being a safe haven, is mainly driven by what we see, unfortunately, happening in the Middle East, and to be specific, what we see happening in Palestine. And we are seeing markets responding to that unfortunate geopolitical crisis, essentially a genocide. I think we have to call it what it is at this stage. And what you are seeing in terms of uncertainty, it does look like investors are flocking into gold as that safe haven bet, unsure of what is to come, are seeking shelter in metals like gold. Of course, you are seeing some take profits happening in today's session, of course, due to the fact that we are in earnings season as well. So we are seeing some dollar strength. But in the grand scheme of things, I think what's happening in Palestine is the main driving force.
And gold and silver are down big to start the week. Is this the beginning of profit taking after the big rally we've seen in a few weeks back?
Yeah, exactly. I would say profit taking, but again, also due to the fact that it is earnings season, so we are going to see the likes of Nvidia later on this week. We are going to see the likes of Meta, Alphabet as well, also in the US, all announcing their Q1 earnings. So due to that, we are seeing an increase in the strength of the dollar, just in anticipation of better than expected earnings. So you are seeing some dollar strength as well, leading to a decline in gold prices.
And talking about dollar strength, do you see that continuing this week? And we know investors are trying to find out when the U.S. Fed is going to start cutting rates, and that's playing into the bullish sentiment with the dollar. But do you see some kind of headwind for the dollar anytime soon?
Yeah, again, I think, like you rightly put it there, just the question and the uncertainty of what the Fed will do. Of course, last week we saw a bit of divergence between the ECB essentially saying June is when they will, regardless of what the Fed do, they will essentially go ahead and cut rates. So you are seeing some of that uncertainty there. But from a technical perspective, I think if you're looking at DXY, where we're currently trading at just underneath that 107 level. So it does look like there is some upwards pressure potentially taking us towards, let's say, the 114 mark. So there does look like some opportunities if it is able to break this current ceiling in the coming days.
And if we see the DXY break those ceilings, that means we're seeing risk assets will go the opposite direction.
Absolutely, exactly. So you could potentially see sentiment begin to shift in terms of metals, especially looking at gold, looking at crude oil. If you're looking at it from a relative strength perspective, it does look like a lot of those assets are currently overbought due to the historical levels of buying, which has been taking place over the last few weeks. And to be frank, again, over the last few months, again, due to what's currently happening with the genocide in Palestine.
Eleman Dambel, always great having your perspective. I know you cover most of these markets. Thank you so much.
Cheers, thank you.
All right, let's get to other stories now. We see traders captured in the informal sector optimistic that the current reforms by the Monetary Authority in Nigeria has redirected the trend of the naira to a rebound. Well, the president of Aspamda, Ngozi Emechebe, who spoke to Channels Television, expects even more gains and says the impacts on commodities may take some time.
I am very happy with what our president, Bola Ahmed Tinubu, has done so far. We are happy. From 1,800 down to what it is today. And I know very soon it will hit 900, 800. And my wish is that it will come down the more so that people will not lose hope of living. One thing about business is this. Many has paid for their goods. It will not be automatic. But the issue there is that it will, it's coming down. There will soon be normalcy in every sector. Thank God for what the Colombian team has been doing so far.
And definitely everyone's looking for that break below the 1,000 level. That's for the naira this time. But we'll keep tracking to see what measures CBN has to take to bring that level to us. Let's get a sense of prospects now for green hydrogen in Africa and happenings also in the global oil market. Joining us for this is Chinandak Dikwa. He's the Vice Chair, African Energy Council. Joining me from Mauritania. Great to have you on the show.
Hi, Ladi. Pleasure to see you again.
Fantastic. So we're seeing oil prices down about 1% today from 3% last week. Is that geopolitical risk premium for oil? It seems it's stepped down fully by investors at this time.
Absolutely, Ladi, and I think thankfully so. You know, many of us are heaving a massive sigh of relief, not just for oil markets, but I think for global geopolitics, as you can imagine. So last week, you had me on, I think last week, and we spoke about this, the fact that there was a huge amount of risk premium that was being baked into oil and gas because of the escalating situation in the Middle East. So would have seen that, first of all, Israel, the attack in Syria on the Iranian embassy, and then we had the reprisal, Iran sort of, for the very first time, directly attacking Israel. I think that's the key thing there. And then Israel directly attacking, Iran. So we've seen both of these very direct attacks. And when you had me on the show, the sentiment was that we'll see a massive escalation, even the oil price of about 130, which is what many analysts have been saying. Thankfully, that has not happened, because as you would see, both sides are showing a lot of restraint. So even though airstrikes have been done directly, I think they've largely been more symbolic as opposed to anything that's really serious. So they're showing a lot of restraint, which is great.
And how much is the strengthening U.S. dollar playing into oil prices at this time? My last guess said the DXY could hit about 114 in coming days.
Absolutely, Laddie. So that's a very interesting one. So I'd say this. First of all, last week, like you said, a 3% drop between last week, sort of 3% drop in total. This week, we're seeing a further 1% drop. And two things are happening. One, it's a risk-off environment, for the Middle East conflict. Right now, the whole market is just looking at market fundamentals. So now that risk is off, the market is being driven mainly by fundamentals of demand and supply. So, like you mentioned there, one is demand and supply, but also, the FX, the US dollar, that continues to consolidate and get stronger. And because of that, of course, when the dollar gets strong, then ultimately, the oil price would weaken because it's denominated based on that. So a part of it is that, without a doubt, that the dollar's getting stronger and ultimately is pushing down, sort of the price of oil, without a doubt. But another thing, Laddie, to think about is U.S. stockpiles has grown in the last week. The last week, we've seen that stockpiles for the US are growing very significantly. So that, again, is weighing. So I'm preempting your next question. What we expect for the end of this week, perhaps, is that even we'll see a slight decrease again going forward, because one, stockpiles are growing, but number two, the interest rates remain very high. We think these two, particularly from a market fundamental standpoint, could depress the price of oil slightly in the short term. And I'll caveat that, in the short term.
Right, and do you think volatility in the Middle East will keep oil markets still jittery in the short term?
I think if you look at general sentiment, it seems like a risk-off environment right now. The restraint has been shown by the two sides, giving the market a lot of confidence. Yes, we had a direct strike. So before now, Laddie, we're talking about attacks through the Houthis and, sort of attacks through proxies, from Israel and Iran, okay? So it was a proxy war. For the first time, we saw a direct conflict between these two. But I'm going to say this, that if you look at Iran's attack, it was very much sort of, we're going to hit you, or X, Y, and Z, and it did happen. Israel were very clear about that. They knew it was coming. And again, if you look at Israel, they were showing a lot of restraint. What the market was pricing in, Laddie, I'll say this. What the market was pricing in was the risk of Israel hitting one of the nuclear facilities in Iran. If that had happened, then without a doubt, we would have seen oil at about $130 a barrel. That's a minimum. Why? Iran is the third OPEC producer of oil. So if that happens, you can imagine the amount of disruption and supply glut that would happen there. So that's not happened. Israel showed a lot of restraint. Iran showed a lot of restraint. And, great stuff for both of them, for doing that. And I think that's why, that did not escalate to a level that we thought it would.
Right. All right, let's look at the renewable energy space now. The first Mauritanian-German green hydrogen forum, that kicks off tomorrow in Mauritania. And I know you're there, you're in town for that. What are you expecting?
Yeah, it's really exciting, I've got to say. It's my first time here in Nouakchott. And it's been a really, really exciting atmosphere to see a country, by all standards, one of the lowest in the world in terms of human development index and GDP growth and all of the statistics that you can throw out. It's great to see them really starting to come out of the parapet and start to lead in green hydrogen development. Not just green, but also, sort of thinking about blue. But the point here is this, and I think this was really exciting. They are positioned, as you would know it, much closer to Europe, just at the base of Europe, so at the top of them is Morocco and then straight into Europe there. And because of that, they're trying to use that advantage, proximity to market, to land hydrogen into Europe. We're helping them to shape that, sort of thesis and business plan and, the technical side of things to make sure that happens. But it's very exciting to see, I've got to say. And I think many African countries need to start to look at that as well. I know several are, and maybe, several other ones. But Nigeria needs to do that as a matter of urgency, without a doubt.
What would you say are the prospects for green hydrogen, also solving Africa's energy issues, at this time, even though we see it has some export potential?
Yeah, so I think the way to answer that question, Laddie, is the world is so interconnected these days from a market standpoint. The reason why I'm saying that is nothing new, but the reason why I'm saying that is because, Laddie, we're seeing for the very first time that carbon taxation is being priced into goods and services. Okay, many people may not know this, but right now, from the third quarter of 2023, last year, up until 2026, Europe have come up with a taxation system. It hasn't kicked in yet. The taxation, particularly between the dates I said, 2023 and 2026, this is just a follow period. The taxation kicks in from 2026. Now, if your goods are going to hit Europe, if you're not decarbonizing it, then all of a sudden, you'll be under pressure because they'll put a tax that's commensurate to how much emissions you're putting out. So to your question, How would that become important for decarbonization routes in Africa? Very, very important. Hydrogen, it's a fuel that you can use for a variety of applications. On a very standard standpoint, it doesn't have huge amount of emissions like you have for oil and gas and other ones. So it's something that you can use in your production, and ultimately means your emissions are a lot smaller than usual. So from an African standpoint, if you take Dangote, for the sake of argument, using him as an example, if we take some of the products he's got, fertilizer and all of that, if they're using hydrogen to produce that, you would land at the port of Rotterdam or land at the port of Hamburg, and the amount of tax you'd pay would be really small compared to someone else in Asia who is not using that. So there is an economic incentive, if you see what I mean. There's an economic incentive there for you to use that in your production, and ultimately that translates to your bottom line because you're much more profitable as well.
All right, we see the European Investment Bank estimate that Africa could have a green hydrogen production capacity exceeding 50 million tons per annum by 2035. Talk to me about how Africa can take advantage of this, and a country like Nigeria.
Yes, great question. So it's a couple of things. One is, if I just take Mauritania. Mauritania is 5 million people. It's right on the coast of Africa, coast of the Atlantic, as it were. It's very proximate to Europe. You can land in Italy easily, into Spain easily, into Italy, Germany, not far away. Mauritania is 5 million people, and is, I think, the 11th largest country in the world by landmass. So think about that for a split second. 5 million people, huge amount of landmass. Ultimately, that means from a green hydrogen standpoint, there's a huge amount of area that you can put solar panels and harvest all of that, solar, and send it into an electrolyzer to produce green hydrogen. And then you have the coast, which you just put straight onto a ship and then send into the market, which is not far away. So that's one use case. Namibia is the same. Namibia, I think, is about 4 million people with a massive landmass. And similar demographic, you can get that done. And several countries, Senegal, about the same. You go into South Africa, they can do the same. So there's several pockets. You go into the north of Africa, Egypt can do the same. Tunisia can do the same. Morocco, they have the huge the Sahara Belt, which has a lot of solar irradiation. So to that point, 50 million tons per annum, that's sort of the thesis, that there's a huge amount of places that you can do that. Now, I'm going to come to Nigeria. Nigeria was a bit different. The coast of Nigeria, we have a huge amount of oil and gas resources there. We don't have lots of land, from that standpoint. So green hydrogen is still a question, okay, because you need a lot of scale for you to make that work, for you to hit the $2 per kilo, which is a magic number, the break-even number, $2 per kilo. So Nigeria needs to think differently from that standpoint. Blue hydrogen is our competitive advantage. We're a gas basin. We can take that gas and turn it into hydrogen, and again put it onto a ship and send it away. So a bit of unconventional thinking, I suppose, is what I'm trying to say. Maybe not green so much for Nigeria to be competitive. Maybe blue is the answer.
All right, definitely we'll keep tracking to see how we can take advantage of that market. Thank you so much, Chinan Dekwal, Vice Chair, African Energy Council. It was great talking to you again.
Pleasure. Thanks for having me.
I'll take a break now. When we come back, we head straight to the markets for the first trading day of this week. Just stay with us. All right, let's head straight to the markets now. Have Will Ibong join us for the details. Good to have you on the market, Will.
Yes, it's good to be back and to talk about the market. But looking at the markets, I'm just glad to see that Nigeria's NGX was in the green at intraday. I don't know, at the time I checked,
right.
I'm hoping to see that.
Not 100K yet.
And then I hope that is sustained till the end of the, at the close of the bell, because what we had last week and the week before was just bloody red.
Yeah, it was a bloodbath.
Yes, we don't
about 2 weeks straight.
We don't need that anymore. It's so much pullback, and we lost that 100K level.
But that's an opportunity for some investors.
Of course.
So some need that.
But some are crying. Some investors are crying. But let's just kick off with the markets. We begin with major equities, and we've seen the sentiments were mostly positive at intraday. Nigeria's NGX, as I was saying earlier, was in green at intraday. We see South Africa's JSE also in the green, 0.43%. Elsewhere, seeing Egypt EGX is down nearly 0.8% today at intraday, 0.79% to be precise. Still within the 28K level. We see also Nairobi's Securities Exchange closing Friday's session in red territory. But let's take a look now. Let's check in on the NGX. That's Nigeria's NGX with Ambrose Omodion, is the Chief Research Officer, Invest Data Consulting, to tell us what's happening in the market, why we're seeing this green close, I mean, not even a close. I've seen the green at intraday, and if it can be sustained after the loss the markets took last week. So let's just check in. Ambrose, are you there?
Yeah, thanks for having me.
Great, Ambrose. So we see that the equities market suffered that about 1.6 trillion naira loss in 1 week. That was last week. What are expectations for this week, especially now that we're seeing the green resurfacing at intraday?
For me, it's a good news, but we can't celebrate yet. But one thing is that when market pull back like this, it's opportunity for investors to buy into value. Especially now we're also in any season, we're seeing a corporate action here and there. That means investors can take advantage of this pullback to buy for what? For dividend income. And for we traders, we're looking at to see how the Q1 number will come out, to see the state of the Q1 number, to give us an insight what the company's financial year will be for 2024. If you want to start on a positive note, it's a signal, especially looking at the government policy, monetary and physical, that's going to impact the sector where the company is operating. That will give us an insight where we could also invest for capital appreciation, especially as we are seeing Q1 number coming anywhere from now. We have seen further that will hit the market, and they are positive. If we see more on the service sector and the financial sector, already we have seen that their full year result was positive, and the part of that pattern is still intact. That we're still having a high interest rate. That means for banking sector, we're going to expect to see a better number. But we're looking at the weight of the risk sector, which is the banking sector. We have seen that Naira are appreciated, all this while. But that will not impact their Q1 because it's just at the late Q1 that was seeing the appreciation. That means if it is sustained in terms of appreciation, we're expected to see that the FX losses they posted previous year and what will come for Q1 will also start reducing in Q2. That will now give investors an insight where they also putting their fund for investment. Also, don't forget that inflation has entered almost the peak in Nigeria history. And the fixed income interest, yes, people say that we are for risk advert people to go there. But look at for a whole year, I'm going to keep my money down to earn 24%. And why in equity of any dividend of almost 9% for just a short period, capital appreciation of almost 30%. Also, you are above inflation. That is why investors should also balance their portfolio. If you know that you are risk advert, balance your put some of your fund in risk asset like equity, and also non-risk asset like bond and treasury B. For me, it's time for us to balance our portfolio. It's not the time for the world to panic. Yes, also we expect that by next month, the government will be celebrating their 1 year in office. We need to see more policy, if it will build on what they have done before, or that also change the economy. And also forget that because of this devaluation or appreciation we are seeing, our equity has become cheaper before the foreign investors. Don't forget that is why CBN has actually increased rate to checkmate interest rate inflation and take that to attract foreign portfolio. If they start coming, I believe that also will be a plus for the market. But all I mean now is that investors should not invest just out of emotion, but to invest intelligently and know where they're putting their money in equity and good sector, expect that will do well, where they will get a good return at the end of the day.
And the news is also coming in that foreign investors are already taking their money out after, getting that about almost 30% returns, in the fixed income markets. So how is that really impacting? Is that why we're seeing more bullish sentiments in the equities markets right now? Because they seem to be leaving with their money. And we've seen that Naira, though it's gaining, but it's like it's getting to a plateau or something. So what's happening there?
There's what we call a circular flow of funds, in the financial world. Now they have made money in a fixed income, they know that yes, they're likely to make more money also in equity. They're likely to move to equity. But what is very clear, look at the volume that we're seeing in the market. It doesn't show that we're having foreign investors in an equity space yet. But the volume is very, very small compared to what we saw when the markets were rallying in January and also in the month of March. But now we're seeing a little volume. Tell you that institutional investors are still kind of looking at the market to balance their portfolio. They are not selling. They see that there's still value in equity space. That's why I said for those that are designing investors, it's time for you to buy into value because when you start seeing funds come to the market again, you see another rally. For this pullback, nobody should not panic for pullback. It's better than any market. No market in the world remain on up. That is the dynamics of equity market any time. We go up and pull back to get opportunity to buy low and sell high. For me, there's no cause for alarm, especially if the Q1 number we're expecting beat expectation. Not because our insight what to expect this financial year, we're good to go. And expect that more policy will come. You can see that apart from saying that we are seeing appreciation in our exchange rate, good thing is that if it is sustained, it will boost productivity at the same time attract inflow to our economy.
Okay, let's delve into the recent shake-up the SEC, that's the Securities Exchange Commission, so that the commission now has a new DG that was appointed by Mr. President Bola Tinubu, with Mr. Momotimi Agama, as well as other new members on the board. Was this an expected move? Did you see this coming? And let me just go further. Mr. Agama has an impressive portfolio. What is expected of him, and what's the impact on the market, this shake-up? This shake-up will have the impact will have on the market?
Yeah, it's expected that this shake-up will come, because if you really want to drive investment, the apex regulator should be up and doing, should be at the top, knowing what is happening. Yes, before now, I think that SEC have been dragging feet, I will tell you. But with this kind of caliber of people who are seen as the new board and also the DG, we expect that they should step up their game. One, do that transparency come to the market. Let them be wide regulation that will take care of everything in the market. Whether we are doing cryptocurrency, we are doing equity, we need a proper regulation, and also protecting what investor. That is the mandate of every SEC anywhere, to protect what investor. I can see that we have seen less of interest of investor represented at SEC, but at this time, with the people who are seen at the board, we expect that they will do more by looking at their major role for regulation, and also opening doors for investment to thrive in Nigeria. That is what we expect them. And also education is very key, because in a population of almost 200 million Nigerians, we have less than 10 million in the market. So that Nigerians investment education is still very, very low. Let the education beyond the elites, let's go to primary school, and those that are informal on the street, the Okadas, and also that will now also help us, because don't forget that Nigeria market survived because of what? Because of local investor in 2020, where the foreign investor left us on our own and went out. I saw the market depressed to 11 years low. But now, because of this investor and local investor, saw the market sustain in almost 4 years in uptrend. If we are seeing more Nigeria playing the market, that will not support the market for people to plan with the market. That's what I expect right now from SEC. That's what they do. But I believe that the new people have instead will have the quality of things to do that as we speak now. I have no fear that this set of people that are now appointed will do magic work themselves. Let's see how they go. But let's give them time for them to plan. For you and I also, as a financial journalists, also have a way of making input or what we expect them to do. That is what that is between now and as the year is also going there. And yes, going down already in April, before the year runs out, we shall see where they are going, because 6 months they're not going to assess anybody that want to make progress in it.
So it's more like setting the agenda and seeing what the SEC, the new board will run, how they'll run with that agenda. And let's see how the market will respond to that. We'll see positives coming out of it. But let's look at another organization that's had a bit of a shake-up, and that's First Bank. We do know that their extraordinary general meeting that was planned for April the 30th this month was to consider the bank's plan, 300 billion naira capital raise, has been cancelled. Also, they have a new CEO now, Mr. Olusegun Alebiosu, who was announced. He's the acting CEO, and this followed the resignation of Mr. Deshola Adeduton. What does this mean? When they cancel this meeting and they're planning to raise 300 billion naira, how does this cancellation and then the new CEO, the announcement, the appointment of the new CEO, how does this impact investor sentiment?
Yeah, actually, before now, I've said it that First Bank planning, First Holding planning, their right issue and order, it could take them a lot of time. A lot of issue on ground. But let's start from the court case. Even when they have any approval, they need to come out from court first before they can continue. Now we're seeing another move again coming, which is also not in interest of the bank. I will tell you, this will send a negative sentiment to the market about it, and no matter the strength of the bank, or no matter who is their chairman or who is their MD. For now, investors that this company has planned to work for extra AGM for them to approve on their work on the right. Now it has been cancelled. And the same way people are expecting that also their MD was retired, another one has been appointed. Yes, investors have to wait to see all these things settle down before they can start looking at the work of that company. Especially also, if you look at the fugaz, but see that other fugaz result has come, yet to have they only have yet to read the result as to speak now. And if you look at their unaudited account that came around January, yes, we have seen that yes, the numbers of those that have results is even better than them. And also the dividend payout history of that company also have not really interested a lot of investors. Despite the capital allocation was because of what we call momentum investing, a lot of what the holding structure and the personality that are behind all those holding structure that is changing in the bank. For me, investors are still taking time to look at what to come out of this new appointment or what we call shake-up was in that holding company that will stay investor where they are good. For me, investors now should play with caution. You can hold your position if you are not good at looking for capital appreciation, because I know that once it's settled, the personality behind them will also make move and the price will go. But if you are looking for dividend income, take away from that company, because I don't see them paying you dividend that is committed to the price it's selling today.
And so what's First Bank trading currently at? What's the price
around 27 naira, and in the history of the bank for the past 5 years, their dividends have not exceeded 50 kobo. If a company is trading for more 27 naira, how much dividend going to pay to connect to that price? Or if they are going to do 100% increase in their dividend plan, that means from 50 kobo they paid the previous year to 1 naira. And that is not enough to support the price of 27 naira. You can see that other second-tier banks are paying even 80 kobo, 85 kobo, 70 kobo, 50 kobo. If Google, the first-tier bank is paying 1 naira, tell you that. That's why if you are investing for dividend, looking for that comment. But if you are investing for capital return or momentum investing, you can wait, because once they're able to settle their home or they settle themselves, expect to see that the personality behind that company is not because of the performance. Price also start rallying. That's why you depend your own investment objective as individual. That's why everybody in the market has different objectives. That's why you have traders, you have investors, who will have driving you in the market.
So let's look at Nestle. That's another company, Nestle Nigeria PLC. It says it wants to revalue, or is revaluing its fixed assets, and the sole aim is to fix the negative shareholders' funds. And we saw this because they had that loss in their 2023 earnings report. And we just want to know, when is this supposed to reflect in the books? We know that they had this huge, a substantial loss that we raised about 78 billion naira of shareholders' funds. How do you see this revaluation, cleaning up their books, as to say?
Yeah, for me, retaining your account or revaluing your account is not the problem as to speak now. What matters is that the company coming back was to profit. You know what happened, that the account was not in red because of what FS losses. If this stability we are seeing in FS is sustained and they cannot plan, it will be a plus for them. But also, it will now review or kind of expose that Nestle Nigeria is exposed to internal loans for their major Nestle International in Switzerland, because it's not only import raw material have it into their operation because of FS laws. So that there are some loans that are running. That means it is now on them to kind of restructure that loan from their parents' country, so that at the end of the day they stay afloat. You saw what Capri did. That Capri International came and also kind of increase their holding, so that this what the Capri was owing in Capri International would automatically be wiped by creating shares, converting that debt to share. For me, the same thing should also go for Nestle. And also, don't look at what the Nigerian just did recently. Yes, they've not started, but they giving the market the money that want to do right issue of 300 billion, almost above what the banks are looking for funding to capitalize. It tells you that they are thinking that yes, they've trust Nigeria. They've been in Nigeria for almost 78 years. It tells you that they have the confidence, knowing that in Nigeria, really about 53% is owned by Heineken International. That means if Heineken can now take its own right, automatically they have prepared fund for Nestle for Nigeria to run. The same thing should happen in Nestle. Nestle International that has about 68 of Nestle should also come a work for investing into Nestle to turn, and not only revaluing assets that will not bring them away from their lost position. Also, with the help of FS being stabilizing, that will be a plus. But revaluation will not do the magic they're expecting. They need to work to replan and know how to work. Their loans to provide that to share, because as we speak now, the share in issue Nestle is very, very small. It's less than a billion share. They can do additional share by converting that loans to share has become a plus for them. Because if you are waiting to the value of assets they are looking like, look at it, what they have about almost 78 billion loss that they posted. I think for me, it should rethink another strategy to not only going to revalue assets to solve the problem.
Okay, so we were just looking at very important, very, very interesting thing there. We saw that the plant and machinery was valued from 58 billion to about 238 billion naira. How does that work? Because looking at fixed assets such as machinery, they should be depreciating, not appreciating. So what is the rationale behind this? Can you just shed more light if you could tell us about that?
No, actually, they are using your current FS valuation. If you want to really start a new business now, you want to bring all those machines, that's the kind of price they are looking at. Today, you want to start the business of Nestle, the kind of business they are doing. You want to start bringing those machines. No, that means not forgetting that those machines also have appreciated, as we just mentioned. No, but now they are looking at the value of what is the dollar exchange today, and that kind of machine is coming back in Nigeria from anywhere. That is the value. But for me, it's not clear. It's not direct. That is what they are doing, because they're looking at what's the value of Naira today and wooden, and that trying to change from 58 billion to almost 220. For me, it's not too clear. I know that in accounting, they will call accounting engineering, but that also do it in a way that we investors will have confidence in what we are doing.
So we're looking at the markets now. How do you see the markets closing this today and for the rest of the week? Can you just give us a bit of projection, because we need some green hope here?
Yeah, for me, I expect that the market will be a mixed market for the week. But for today, the market is going to close marginally in green, because most of the the banks that put the market down for almost 1 week are trying to rebound today. If it's sustained, especially those that have their qualification day within this week, investors will try to take position because of their qualification date. That will support the price. For me, we're going to see a mixed market today. But as far the any P1 number is ahead, any moment from now, once it comes, that will change the cycle of the market, and also see what the CBN will be doing in their May edition of their next FPC meeting. We have seen that in mature economy, some big central banks are planning to cut rate, while others are trying to extend it. I believe that our own CBN to think that it is not interest rate alone to fight inflation. They should look elsewhere. That is why, because our own inflation is not a result of liquidity alone. It's a structural issue. They go beyond that. That will also help us to forecast for the month of May. But for this week, we're going to see a mixed market, and today market will close light green, marginally green. Let me put that way. Yeah.
And so what about the rest of the week? Do we see the green continuing, though we say it's going to be marginal today? What do you see for the rest of the week?
I said it's a mixed market for the week. That means if market is up today, it's probably that we'll see another marginal rate tomorrow. Wednesday, it depends on the number that we hit the market, especially all those Q1 number that has 30th of April as the last day to release your first quarter have ended in the month of March.
Thank you so much, Ambrose Omodion, Chief Research Officer, Invest Data Consulting, for sharing your thoughts on Business Incorporated.
Thanks for having me.
It's good to have you. So we'll just look at the Middle East now. Let's see where most major equities in the Gulf traded mostly negative at intraday. We see Abu Dhabi down 0.1% at 9,000 points. You see Dubai in the green on the flip side, trading up 0.54%. Now, still within the region, let's look at Saudi and Qatar indexes. They're in the red, 0.14% and 0.31% each. Now, we'll go to the U.S. We see stock futures pushed higher on Monday as Wall Street looks to finding its footing following a steep sell-off for tech companies. Now, futures tied to the S&P 500 rose 0.58%. We're seeing that on the screen. We're seeing that for the NASDAQ. Also, it gained 0.74%, and the Dow Jones was up 0.48%. Now, we've seen that in the last week, they were a bit bloody, but NASDAQ and S&P 500 lost a lot, but the Dow, which had less tech exposure than the other two benchmark averages, was little changed for that week. Now, the struggles for equities are coming as the recent inflation readings have diminished hopes that the Federal Reserve will cut rates several times in 2024. And this week, we're also looking to see major economic updates, such as the GDP is due out this week on Thursday, and key inflation reading on Friday as well. Also, we're going to be seeing corporate earnings from that country as well. It's going to be a major factor for the coming days, with names like Tesla, Meta Platforms, American Airlines, Microsoft, and Alphabet all set to report in the week. But we're also seeing for Tesla, if I took Ladi, it's more like Tesla, we're seeing them, cutting the prices for some models of the electric vehicles. From the investors have been worried and cautious for that stock. And we also see that they're going to be reporting tomorrow. And that's a shift away from their usual traditional Wednesday for reporting their earnings. So it's kind of like what's the shake-up for? Why are they changing tradition? Why are they cutting prices, slashing it down? Is it the China vibes?
Quite interesting what's happening with Tesla at this point. And I'm sure investors are wondering, where is the bottom? An analyst I listened to earlier did say the bottom is about 30% down from these prices. So quite incredible. We'll see how it plays out for Tesla going forward. But right here, Nigeria this week, I'm sure we're expecting some Q1 numbers, for some of these companies. It'll be interesting to see how investors, react in Nigeria. All right, thank you so much, Will, for the update. All right, now let's take it on to Europe now. See, Boehringer Ingelheim might not be a household name, but it's one of the world's largest pharmaceutical companies. In Germany, it's recently passed Bayer as #1 in that sector. Now, the company has announced a major investment in China. Well, Lars Holter has the details from Berlin. Great to have you, Lars. So what can you tell us about this latest investment?
Thanks for having me, Ladi. Well, it is a major investment indeed. Boehringer Ingelheim seems like a complicated name, I know, but the company was founded in the late 19th century by a Mr. Boehringer in the town of Ingelheim, hence Boehringer Ingelheim. Well, that company is going to invest 4 billion yuan, that's around €500 million, in its China business. Around 80% of that money will go into prescription drugs and consumer healthcare, and the rest will go into its animal health business. All of it, and I find this the most concerning part, goes into research and development. And this begs the question, of course, why is the company no longer just outsourcing production, but even research and development? And it is for the very reason many observers have feared for a long time. China has long passed many Western economies, including in research, whether it's for tech or apparently pharmaceuticals.
All right, isn't this a surprising move by a German company, considering we've heard a lot about, getting out of China?
Yes and no. It's true. Germany, just like much of the EU and even the US, has long been talking about decoupling from China. And then when that sounded a bit rude, they've changed the term to de-risking from China. But not much is actually happening there. Sure, many companies have upped their investment in India, in South Korea, and Vietnam, just to make sure they have partners and suppliers in Asia if problems were to occur in the China trade. But at the same time, investments have not at all been cut in China. As a matter of fact, just last year in 2023, foreign direct investment from Germany in China has reached a new all-time high. So maybe with some other countries seeing more investment, you could argue that we are becoming a little less dependent on Beijing. But generally, it's becoming more clear every week that currently we just can't do much without our biggest trading partner in the East.
Right, quite a lot to track there. But what are investors looking at in today's market?
It looks like we're in for a somewhat calm start into the week. That's at least partially due to the fact that there hasn't been any further escalation of the Middle East conflict over the weekend. Also in the US, they finally got that Ukraine aid package through Congress. So it looks a bit like we're heading into smoother territory. We're also getting some data today, consumer data that is for the EU, and that might be a market mover or not. We've learned a long time ago, of course, that even highly anticipated market data doesn't always have much of an impact.
All right, we'll get a check on how the European consumer is faring. But thank you so much. I will get that data tomorrow. That's Lars Holter right there in Berlin. Thank you, Lars. Well, let's get some other stories now. Starting in Kenya, we see the US dollar made a comeback against the Kenyan shilling last week, according to data from the Central Bank of Kenya. The shilling saw a significant depreciation, with the exchange rate reaching a staggering 131 shillings against the dollar. And we see Forex Bureau shops exchange rates indicated that the Kenyan currency was oscillating between 133 to 135 Kenyan shillings against the dollar. And to Egypt now, the Central Bank of Egypt has issued treasury bonds with fixed coupon in Egyptian pounds worth £4 billion in coordinating with the Ministry of Finance. According to a statement on its website, the fixed coupon bond has a maturity date of April 16, 2027, offering a competitive coupon rate of 25.15% per year. All right, let's get a quick check on the crypto market now. Let's get the headlines. We're seeing Bitcoin making some kind of recovery right now in the market. If we look at the screen, it's actually green on the screen at this time, with a fewer pockets of red. Different from what we had last week there. We see Bitcoin holding up above that 66,000 level. The meme mania might be over there. This little pocket here, that's Dogecoin in a red. And we see big, deeper greens with Near Protocol, .imx, and Ethereum holding up above the $3,000 mark, even though we've seen a lot of sell pressure in the market. Let's look at the headlines right now in the crypto market. We see Man City, football club Man City, they've launched an NFT collection. And that's according to a statement by Man City and OKX. That's OK Exchange. That's a cryptocurrency exchange. Have joined forces with two talented artists to bring a creative twist to the 2023-2024 City Home Shirt through Unseen City Shirts NFT collection, promising a unique and captivating experience for their collectors. Then a crypto exchange, Kraken, acquired a trade station. And that's the US-based digital asset exchange, Kraken. They bought TradeStation Crypto to expand its regulatory licensing in the US. Kraken's takeover of TradeStation Crypto, that's a digital asset-focused division of online brokerage TradeStation. It expands the cryptocurrency exchange's regulatory licensing in the US. And we see the fleeing Binance executive arrested. That's Nadeem Anjarwalla, one of the Binance executives who fled captivity, in Nigeria. Have reports he's been arrested in Kenya. And we see Nigeria asking for some extradition for the fleeing executive at this time. So it's still a developing story. We'll keep tracking to see how it plays out. But Binance still having that issue right here in Nigeria. All right, let's take the conversation further now. It's post Bitcoin halving, and I'm sure investors are wondering what next. The halving has come and gone. So let's talk to Chimezie Chuta now to bring us updates. The founder, Blockchain Nigeria User Group. Great to have you, Chimezie.
Yeah, Ladi, thanks for the opportunity to join you again today.
Fantastic. So the Bitcoin halving has come and gone. What next?
Well, the crypto market is set for another bullish leg up in the next few weeks or months. But for investors, my personal advice is that they should also be very careful at this time, because typically before halving, Bitcoin traditionally is known to dip in price. We know that there was a little dip from 74,000 to 61 or even 59,000, but the percentage dip was not as much as we normally used to know in crypto. So probably it might dip more, or probably we might go from here to the all new time high that we all are expecting. So it's a very dicey condition in the market right now. And for everyone who wants to play, make sure you play safe and have a ready-made portfolio management strategy by your side before you play.
Yeah, because we know how these markets know how to take back profits. That's unrealized profit by investors. But looking at how things have played out pre-halving, into post-halving, how do you see Bitcoin's network, before halving, and what do you expect going forward?
Okay, this particular bull run is significantly different from the previous one, because this is the first bull run that we are having with investments in crypto and Bitcoin generally coming for institutions and big banks and corporations. So definitely we're going to be having something that we have never experienced before. So probably we might see Bitcoin doing 250,000 and above in this cycle. But again, it will not happen in one leg and all that. So there's going to be a lot of a pullback, a whole lot of green candles, then some sharp drops will come into the market. So by that, I mean that nobody should expect there is going to be one-way traffic to the moon to $250,000 or $500,000 for Bitcoin. But it's realizable. It's quite realizable, because right now the institutional investors are the one holding Bitcoin price from 54,000 to where we are right now, which is around 66,000. So if they continue to hold, and remember, most of these institutional investors like BlackRock and so on, they are not day traders, they are not retailers. So they hold Bitcoin not necessarily for daily profit, but they hold those Bitcoin for a long time. So if you take a look at the Bitcoin position of MicroStrategy, you know that a company like that is really playing long time. When asked when they are going to sell Bitcoin, Michael Saylor, the CEO of MicroStrategy, said that they are never going to sell. They have no such plan to sell. So that's a kind of a clarion call to all the institutions, especially institutions in Nigeria. We want to start seeing the likes of Dangote go into Bitcoin. We want to see the likes of Tony Lumenu, have public wallets that we can verify that these guys are holding Bitcoin, because the entire U.S. economy, and recently, of course, we also know that Japan has opened their doors by also announcing Bitcoin ETF. So all over the world, people have accepted Bitcoin as an asset that has magnificent power to gain in over the years. So I think Nigerian investors, and especially African investors, want to start seeing them as big time players in this industry.
All right, but looking at the network, the Bitcoin network, specifically now, we've had quite a number of halvings, in the past, and everyone seems to focus on the price of Bitcoin, always going up. Pre and post-halving. But with all the halving events, so far, has the Bitcoin network really, improved, before now, about, let's say, compared to about 10 years ago? Because we still have that issue where, when there's a bull market, the Bitcoin network, gets slow, fees go up. How's the network really looking?
Okay, there has been several improvement efforts that have been proposed to the Bitcoin network to make it a little bit more resilient. Let's accept this. Bitcoin is a very archaic software and needs a lot of upgrade. So that's why somewhere along the line we had the Lightning Network that was there to create a layer 2 platform for speedy transaction and lower transaction fees. Now we are seeing that the halving has come and gone. So significantly, the price of transaction, the transaction fees are already doubled. I did a transaction a day after the halving, and I almost used half of the amount that I was trying to transfer to pay for transaction fees. So again, we are seeing a whole lot of smart contract enablement on the Bitcoin network. I'm sure you must have heard about the BRC20 protocol that enables smart contracts to be written on Bitcoin, and we started having things like ordinals, which are inscriptions that are embedded on Bitcoin. But of course, it didn't last long because there was so much that was not taken care of. So now we're also experiencing another technology called the runes, R-U-N-E. So runes are Bitcoin assets, and they're also being built on top of the Bitcoin protocol to enable people to create NFTs, to create meme coins, and a few other things by enabling what they call post-transaction records. So you spend your Bitcoin and you obtain a certain code about it so that you will be able to use them for faster transaction on real networks. So there will be a lot more improvement that will be coming up. And it's better for everyone that is interested in the ecosystem to open its eyes to focus on what's going to happen in this circle.
Right. I guess if you don't know, it's more learning, for now to understand really how this, blockchain works. But let's switch now to this Binance issue. We see the Binance executive, he's been arrested, or the claims he's been arrested in Kenya, and we might see some extradition of, back to, Nigeria at this time. How are you seeing, all of this play out? It seems to be some kind of escalation at this time.
Actually, it is a huge escalation. And yes, the authorities, Nigerian authorities, have the right to apply whichever strategy that they need to use to bring justice to serve where it's necessary. But we also know that these things go beyond being able to bring people to justice. This is about international politics. This is about international business. We are a country that is in dire need of foreign investors. And I dare say to you that there are a whole lot of organizations that are also standing by and watching how Nigeria handles these issues. And we should also be mindful that we don't send the wrong signals to other organizations. Probably they may not be crypto-based, but any other company that is trying to do business in Nigeria would definitely want to keep an eye on what is happening to the Binance issues. I don't want to go into whether what they did was right or wrong, because it's a matter that is already in court. But then I believe that Nigeria should be able to handle most of these things more diplomatically and give an impression that what they are interested in doing is enforcing the law and not witch hunting.
All right, definitely. We'll keep tracking. It's a developing story, at this time, and we'll see how, it plays out, finally. Thank you so much for coming on, Chimezie Chuta. It was great having you.
Thank you, Ladi. Bye.
All right, so that's the show today, and that's how the markets are looking. Definitely be looking out for how the NGX plays out today. It's already looking positive, at intraday at this time. Remember, you can visit channelcv.com for more updates. I'm Ladi Williams from Mina Team right here at Channels HQ. It's bye for now.
Breaking news.
Again with the latest Russia's